This is TradeFlow News, bringing you relevant news and insights from around the world. TradeFlow News, enabling trade for SMEs and economies worldwide.
These are some of the key topics that we will be looking into in today's program.
First, let's take a look at the overnight headlines which are impacting the commodity markets.
Oil prices ticked higher in early trade on Thursday as investors weighed the escalating conflict in the Middle East and the potential for disruption to crude flows, against an amply supplied global market. Brent crude futures increased 64 cents, or 0.87%, to $74.54 a barrel as of 0006 GMT. U.S. West Texas Intermediate crude futures gained 72 cents, or 1.03%, to $70.82 a barrel. An Israeli strike on central Beirut's Bashura neighborhood early on Thursday left 2 killed and 11 wounded, the Lebanese health ministry said in a statement.
OPEC has enough spare oil capacity to compensate for a full loss of Iranian supply if Israel knocks out that country's facilities, but the producer group would struggle if Iran retaliates by hitting installations of its Gulf neighbors. Iran fired hundreds of missiles at Israel on Tuesday in response to Israeli airstrikes and attacks. Israel's Prime Minister Benjamin Netanyahu said Iran made a big mistake and would pay for it, and Iran threatened a crushing response if Israel retaliated. Israel's options include targeting Iranian oil production facilities among other strategic sites, U.S. news website Axios reported on Wednesday, citing Israeli officials. Iran is an OPEC member with production of around 3.2 million barrels per day, or 3% of global output.
Moving on to the top news in the energy sector.
U.S. crude oil inventories rose last week as refinery utilization rates fell amid weakening fuel demand, data from the Energy Information Administration showed on Wednesday. Crude inventories rose by 3.9 million barrels to 417 million barrels in the week ended September 27, the EIA said, compared with analysts' expectations in a Reuters poll for a 1.3 million barrel draw. Crude stocks at the Cushing, Oklahoma, delivery hub rose by 840,000 barrels. As we descend into seasonal refinery maintenance, a chunky drop in refining activity has ushered in a build to crude inventories, said Matt Smith, analyst at ship tracking firm Capeler.
For the first time, electricity generation from Australian solar and wind farms could match that coming from the country's coal-fired power plants this summer. Combined solar and wind electricity generation is on track to hit between 8 and 9 terawatt-hours, TWh, a month during the heart of the Australian summer, according to Reuters projections using historical data from energy think tank Ember. Coal-fired electricity generation is likely to decline to similar levels over the same period, and mark the first time that renewables have a shot of surpassing coal as Australia's chief source of electricity. Next, we have the top news in metal markets. The London Metal Exchange, LME, is tracking tightness in the aluminium market, which has seen a key spread shoot to a sizable premium and one party amass a large long or bullish position in the October contract. The LME is closely monitoring the tightness in the aluminium market and has the necessary controls in place to ensure continued market orderliness, the LME said on Wednesday in response to a request for comment. The premium of LME October aluminium over November hit $18 a metric ton on Wednesday from a premium of $5.85 about 3 weeks ago and a discount of $17.50 in July.
Copper prices pushed higher on Wednesday, still basking in the glow of stimulus measures unleashed by top metals consumer China amid hopes that more support is on its way. 3-month copper on the London Metal Exchange was up 1.1% at $10,085.50 per metric ton by 16:30 GMT. US COMEX copper futures climbed 1.4% to $4.62 per LB. LME copper has gained 7% since U.S. interest rates were cut on September 18, which was followed by several announcements by China of new stimulus programs.
We will now look at the top news in the agricultural sector.
The European Commission said it would propose delaying implementation of a law banning the import of commodities linked to deforestation by a year on Wednesday, following calls from industries and governments around the world. The law has been hailed as a landmark in the fight against climate change, But countries and industries from Brazil to Malaysia say it is protectionist and could end up excluding millions of poor, small-scale farmers from the EU market. There were also widespread warnings from industry that the EU deforestation regulation, or EUDR, would disrupt the European Union's supply chains and push up prices.
That is all for today's news on commodity markets. Stay tuned to TradeFlow News as we continue to provide you with more updates. We also invite you to follow us on Twitter at TradeFlow News, which allows you to watch our program on your mobile device or desktop to receive information from there.